To say our comments over the last 2 months have aged better than anyone expected, except for us, would be an understatement. For the past 3 months, we've been telling you that the 2-year bull market was coming to an end and that we were transitioning into a bear market. We also warned that cryptocurrency would be affected and not in a positive way. Additionally, we highlighted commodities, specifically natural gas, as the first asset on our list poised for an upward move. To say we didn't drop gospel on you would be an understatement. Imagine taking all the profits from the last 2 years, nearly selling at the top of the stock market and cryptocurrency, and then rolling those gains into natural gas, which has outperformed. The funny part, I'm not selling you anything. I'm not asking you to click on an affiliate link or to join a Discord or buy a course. I don't care if you agree with me, because if I'm right, I will have already profited massively. What I am doing is putting my thoughts out there, putting myself on the line, and proving to you that I am the best. I also tell you to build your own system. Don't just rely on YouTube videos, buy into a newsletter, or join a Discord. And definitely don't just dollar cost average blindly. We correctly called the bottom of this bull market 2 years ago, and we correctly took profits near the top of all the major indexes. There's nothing left for me to prove. Let's continue with what we've been preaching for the past 2 months. Short into market rallies and focus on commodities that are breaking out. We also reiterate our stance on shorting cryptocurrencies on rallies. These thoughts about a bear market won't bring me subscribers or likes. In fact, quite the opposite. When you have an opinion that goes against what people are passionate about, they will hate you for it. But it's coming. The pattern is clear. 2 months ago, I urged you to take some profits off the table, telling you that you have the chance to buy back at lower prices. I told you I had pulled 100% of my money out of equities and cryptocurrency and was slowly moving into commodities like natural gas. All of this has been documented on YouTube. Don't watch it. Don't subscribe. Keep believing you're right. But when you wake up 6 months from now, you'll remember this video. 2 months ago, we told you that BlackRock was getting out of cryptocurrency. We told you Warren Buffett was sitting on record levels of cash. We told you CEOs and insiders were selling their stocks. Yet, you're still being told to dollar cost average, to hold on for the long term. Okay, no, I don't get it. Build a system that works. Build a system that isn't bought. Build a system that isn't trying to sell you something, because those won't work in a bear market. For the last 2 years in a bull market, everyone was telling you to buy the dips. And for those 2 years, it worked. But cowboy, we're playing a different game now. And the new game is short the rallies. As we spent the last 2 years buying the dips of the Magnificent Seven, we're now seeing a shift. These stocks have been holding up the market, but some are starting to weaken. Our shorting will become more aggressive when a rally occurs. Over the next few weeks, some news will trigger a bounce. It could be an impressive earnings report from NVIDIA, the end of the Russian-Ukrainian war, or another unexpected event. But regardless of what drives the rally, I will stick to the principles I started 2025 with: short the rallies, short the markets, and buy breakout commodities. The Magnificent Seven makes up 33% of the S&P 500, while the other 493 companies account for 67%. If, or rather when, the Magnificent Seven decline, they will drag the major indexes down with them. Back in 2000, at the height of the dot-com bubble, the top 7 companies made up 22% of the S&P 500. Today, the Magnificent Seven hold an even larger share, which means their eventual decline will lead to an even steeper market drop. I'm not predicting a full-blown financial crisis or the end of the world. I'm simply recognizing that we're selling off. We're in a bear market, and we've already seen the top. Over the next 6 months to a year, we'll find the bottom. So why not raise cash now? Build your own system and be ready to buy at the bottom. What is a bubble or a crash? It's more of a state of mind, that purely quantitative calculation. When a bubble bursts, it's the psychology of investors, traders, and investment bankers that shift first. If you're watching this video, you're likely part of the public, the group that is usually wrong. Ask yourself, are you Warren Buffett, sitting on cash levels not seen since 2022? Are you BlackRock, which exited cryptocurrency 2 months ago? Are you still convinced this market won't go down? A bubble isn't just about rapidly rising stock prices. It's a mania driven by irrational exuberance, blind admiration of certain stocks or assets, a belief they can't fall, the fear of missing out, FOMO, the conviction that there's no price too high. Do you really believe there's no price too high for NVIDIA, Palantir, Apple, Microsoft, or cryptocurrency? If so, you're playing with emotion, but I'm playing with facts. It's easy to tell you to just buy and hold, to keep averaging it down on Palantir, to believe NVIDIA will keep going up forever, but that's not how the market works. What will shock you is that the next big winners won't be tech stocks. They'll be natural gas, energy, wheat, orange juice, and the entire commodity sector. You may not believe me now, just like you didn't believe me 2 months ago, but being different, telling the truth, and going against the herd isn't easy. Let's see who's right. Irrational exuberance is at all-time high. Brokerage accounts are being opened at a rapid pace, driven by fear of missing out on a market that many people believe will never go down. The top stocks retail traders are piling into are NVIDIA, Tesla, Palantir Technologies, and MicroStrategy. These are exactly the companies we are shorting or looking to short. Why? Because the run has ended. This is what happens when the public chases momentum. They get caught in the final stages of irrational exuberance. There are key warning signs that always appear before a market crash, whether it's a widespread financial crisis or an isolated sector collapse. Knowing how to spot these indicators gives you a heads up before the crash begins, allowing you to protect your portfolio and even profit from the downturn. The first sign, euphoria and FOMO. Before a crash, euphoria and fear of missing out has taken over. Bull markets climb a wall of worry, meaning they don't simply die of old age. They die when everyone expects unlimited gains and beliefs they'll get rich effortlessly. The second sign, illogical valuations. Markets assign valuations based on expectations of future growth, but when these expectations become unrealistic, it's a warning sign. If an entire sector trade at a sky-high valuation, despite weak fundamentals, that's a clear indicator of unsubstantial growth. What's happening now? I see rotations out of the Magnificent Seven. I see inflation rising, not just in the US, but globally. I see the cost of living increasing. The warning signs are here. The question is, are you prepared? Our continued focus is on natural gas. And about 2 months ago, we told you energy wars will be coming. We also told you that the commodities market will lead the way in 2025. Our top recommendation since the beginning of the year was natural gas, and we have not disappointed. We are up on our long-term investment 31%. We are up trading natural gas 150%. And on our CFD options, we're up over 900% in little over 2 months. What are some of the fundamentals of natural gas? First, it is in the commodity sector. It has been beaten down for the last 2 years and have recently just broke out. We told you 2 months ago that this is our top pick. And one of the reasons we're hearing is that natural gas will be the energy source to fund all the supercomputers. So all this new wave of super chips needs energy. Artificial intelligence needs energy. It demands enormous amounts of it. These energy-hungry supercomputers require a reliable power source, and there's a growing chatter in the industry that natural gas could be a significant beneficiary of this trend. Anything power-related, whether for data centers or AI infrastructure, is becoming a dominant theme in today's market. It has not hit the public yet, but I believe in 6 months, what I'm telling you now, it'll be in mainstream news. Natural gas has a potential to play a pivotal role in this ecosystem. Think of it as a technology sector commodity, the lifeblood of powering data centers and AI systems. The rumors and speculation are fueling this rally, and natural gas very well could emerge as the primary energy source of the electricity generation in this new technology age. While many pundits on TV argue that natural gas prices might fall due to pro-energy policies under Trump, it's important not to overlook another aspect of the administration's $500 million investment into artificial intelligence. That's a lot of energies. The energy wars are coming, and it will be led by natural gas. We are big on patterns and historical patterns. We know what worked last year will not work this year. And if you look at the GSG, in a period of time, it skyrocketed while the QQQs went downwards. This same pattern, we believe, will be happening all over again. But let's just take a look at our numbers for the long term. We initially put a buy on January 31st, with the last 30 or 45 days before January 31st telling you buy on pullbacks, buy on pullbacks. If you had bought anywhere on the pullbacks, you have been up close to 32%. We feel this has a lot longer to run natural gas. As if we look at a longer term picture, natural gas high was at close to 140 back in Q3 2022. And then it was destroyed and it went all the way down to 16. The room that this commodity, that this ETF, and that this sector has, it's a lot. Let's go back. This security broke out on high volume. On pullbacks, it went straight up. So that's why we're recommending you natural gas. Thus saying that disclaimer, you need to build your own system also. We see natural gas going from the accumulation phase to the growth phase. As what we've been recommending for the last 2 years, we see this as a distribution phase to a declining phase. And we would love to see the commodity index follow suit, as there has been a pullback because of oil prices on the commodity index. But thus again, gold, silver are also doing well. So in the commodity index, it is a bull market. In the S&P 500 and the QQQs, it's a bear market. So we are investing in a bull market, which is in the energy, which is in the commodities. We use oversold indicators every time that there's a pullback to buy into it. We are not buying the natural gas off the 52-week lows. Even though natural gas has a lot of room to run, it is not a cheap trap. We are prioritizing uptrends. This is clearly on an uptrend. We have exit downtrends promptly, and we maintain consistency in our strategy. We were lucky enough to tell you about the breakout point on natural gas, and this is the first opportunity. But now we are in what's called a continuation buying. During the advancing stage, particularly when the stock retraces back close to its moving average and consolidates. When the stock breaks out above the top, its resistance zone, in this scenario, it is known as a continuation buy. While this type of buy offers high probabilities of rapid advancement. We're going to go over some oversold and overbought indicators next. But what we've seen is that we always don't get the levels we want when we have a bullish trend. The sell-offs are never going to be that good on natural gas. So we keep buying on this security. Let's go over overbought, oversold short term. It's at a level of 20. So it is in a neutral level. We go to overbought, oversold for medium term, long term, and exit swing signal, all neutral readings. So again, we're feeling that we're not going to get much of an opportunity or help, that much help off overbought, oversold indicators. We are going to be using a weight of evidence. This weight of evidence tells us buy on pullbacks, and it won't be exact for us. Where could this go lower before the pullback? If we go to our CCI indicator, we could reach close to the 0 point before it bounces, what it usually does. But again, on something such a powerful move, we don't think we're going to get much of a pullback. The top side is 140 on this stock. The low side is 16. We're going to see in the next few weeks, in the next few months, who is right. Will NVIDIA have better gains than natural gas? Will Palantir have better gains than natural gas? So far, we have sold out of all our positions in technologies and cryptocurrency, close to the top, and getting into natural gas, which on a long-term position has been up 32%. While obviously some of the most popular Magnificent Seven is down anywhere from 15 to 35%. Where would you rather have been the last 2 months? Up 32% on a position or down 35 to 45% on a position? Again, you need to build your own system, your own techniques. We use a weight of evidence and come up with a probability of success. You know the catchphrase. Study it, analyze it, adapt it. Peace.